Everyone, welcome back to episode 329 of the Your Money Your Life podcast. We have a long episode, a good episode today, I should say. We'll talk about a lot of different things that are going on. But first, before we get into that, make sure you like, subscribe, 5-star, rate, and review this podcast. Let us jump into it. Our first thing we want to discuss, which is literally always the market. So let's actually jump into the market first and foremost and see how we have trended as far as the market's performance the past 5 days, which is about up 0.5%. The futures this morning are showing that will potentially be flat to down, but the past month the market has given us over 5%. The past 6 months we've gotten over 10% from the S&P. Year to date, we're up 9%, which is another strong rally in the market so far year to date. We're almost halfway through the year. So that's a pretty strong signals that the market is rebuffing anything that we've seen so far when it comes to geopolitics, when it comes to themes on AI bubbles. All these different things have been rebuffed so far. Now, will that always last to infinity? No. There will be corrections, there will be pullbacks, but as we stated, they'll shake out in time with patience. And if you're holding things that you believe are strong assets, you just want to be patient. You don't want to panic, right? If people panic during these times that we're showing year to date, here you could have panicked at the bottom in March. I'm sure a lot of people did when other people were buying and there were more buyers than sellers because the price is starting to rise. The S&P 500 has increased since that time frame. So those are just signals that you patience is key here. Patience is incredibly key. So you'll see that in the market. Let's put out a year, almost 30%. Man, 10 years, you're getting on the S&P 500, 258%. 10 years is someone that's incredible. You're seeing a lot of inflation and a lot of inflation of assets as well, because most people are just going to put their money in the market. There's nowhere else to put it. You know, if you talk about, I think there was a stat that the top 14% own, or I want to get the exact stat on how much wealth is owned in the stock market, wealth by the top percent of wealthy people. And it's a really, really huge chunk of how much they own as far as the market, right? And so if you have to think about conceptually where they're going to put their money, it's cash, it's different things, but if they have extra liquidity, it's more than likely going to the market, right? Because they know it's going to increase in value over time, and they have other cash elsewhere to spend on cost of living. Up to a certain point, you don't need to have more to spend on cost of living. So think about that conceptually as you consider what happens in the case of bubbles, corrections, or pullbacks. Let's go to current news. Lululemon and its founder are end their years-long feud. So Lululemon on Wednesday ended its long-running power struggle with its founder, Chip Wilson. It's an upscale athletic wear company, as you know. They agreed to add three of Wilson's picks to its board of directors, including former ESPN marketing chief Lori Gentile and former co-CEO Mark Moore. So he wanted some people on the board. He wanted some of his people on the board, and so they did that, as well as he left the company more than a decade ago, but he's become outspoken against Lululemon as sales has slowed and competition within the sector has become more intense. Interesting. Yeah, this is a brand that has been having issues because it's gotten more competition. You have Aloe, Skims, all these different places that are coming into the marketplace that are really gaining market share on Lululemon. And so they ended the hatchet, so they're no longer fighting with each other, so they could focus on what looks to be new products, retail, just revamping their product line, revamping their way they're logistically structured, right? Retail stores, outlets, how they're doing everything. The stock itself, shares are down 60% from a year earlier. And so that's a company that needs to revamp and focus less on the fighting, the proxy fighting, and more on how they're going to gain back market share. So that's pretty interesting. I've actually thought it was a really interesting article. Let's roll out another one that I thought was interesting. Meta is rolling out subscriptions to boost revenue streams. I already thought they had subscriptions, but they're saying Meta is launching subscription plans globally across its major apps, including Instagram, Facebook, and WhatsApp, and will begin testing its AI-focused offerings. This app subscriptions priced between $2.99 and $3.99 per month will unlock additional features for users, while AI tools will be offered in two tiers at $7.99 and $19.99 per month. and will initially launch in select countries. The initiative underscores Meta's broader push to diversify revenue streams beyond its core advertising business. Interesting. I thought they had, well, the paid check mark. I thought they already had paid subscriptions. Did they take that away and they're bringing it back? It's about AI monetization. This guy's saying they want to have premium AI tools, product productivity features, creativity enhancements, and AI video generation through vibes. Interesting. So they're adding different revenue streams. This makes sense to me. A lot of places and platforms are, especially social media platforms. Meta owns so much social media communication platforms that if they add subscriptions and some people actually buy and subscribe, it will definitely boost obviously revenue, but it's going to be just another diversified stream for them and a way for them to get paid for the AI tools that they're making, right? So that's interesting to me. Um, Interesting. So I think, do we all have to subscribe? What does the subscriptions get us is the question. Let's see. I'm actually curious on what the subscriptions will get us. It seems like there's just different features for users at the lower tiers. And then when you get to the higher tiers, you get to use more of their AI features, which does anyone use Meta AI? What is the Meta AI? I forgot what they call it, but I don't use it. I have a subscription with ChatGPT and Claude. Those are the ones I use so far. They've been helpful, really powerful engines, but is the Meta one any good? We'll have to see. I'll have to keep my eye on that. And also, are we going to be paying for subscription use for Meta? I don't know. Let's get back into geopolitical news. The traffic through the Strait of Hormuz once again stalls. So oil prices are rising because the traffic through the strait has returned to a standstill on Thursday after Iran said it had attacked a U.S. military base in a continued test of fragile peace talks. August futures for Brent crude, the global benchmark, climbed about 2% to $94 a barrel. This hike came after only two ships were observed transiting the vital strait that controls 20% of the world's oil supply. And this is per Bloomberg. The sides are continuing to negotiate an end to hostilities and resumption of global oil shipments. So, this again is what I talked about with the fact that this is not going to be just over in a week, 2 weeks. We're still dealing with the negotiations. And that's going to have an effect on Brent crude oil prices, which have been bouncing around. And now we're seeing that they've risen 2% on the fact that we haven't seen a lot of transiting through the Strait of Hormuz, which is obviously where a lot of supply of oil goes from. So if you look at a 6 month chart of this spot Brent crude oil um, security, so you're seeing that a lot of volatility. We've come down a bit from the height of May, which was we were getting close to $120 a barrel. And now we're at sitting around $98 a barrel, but we're still it's trending upwards here. So we're still dealing with that, and it's still not done. There's still no deal done. The talks, I guess, are continuing, but we haven't gotten to a place where we could say with certainty that that conflict is over. So that's a big thing to watch because again, it's going to affect the oil prices. The market again has rebuffed a lot of those issues and has been pulled forward pretty handedly. But again, that will play a big part in the economy as a whole for travel, for transportation companies, logistics, everything. So we'll have to keep our eyes on that and see when that gets resolved. Let's go to news on Target. Target is testing new metrics to evaluate its employees. They're implementing new customer engagement metrics designed to evaluate employee performance as the retailer is aiming to enhance service consistency in its stores. The initiative follows extensive training for over 300,000 employees. This is a spokesperson for the company that's saying it's part of a strategy to combat a long-term sales slump under the new CEO. So they're focused on customer service. So Target's saying, hey, we're having a sales slump. How do we fix this? The best thing we could do is focus on customer service. That's a good move from them. I think they're doing better in the sense of PR version, where a lot of other companies saying, "Hey, we're struggling. We're just going to cut employees and focus on AI." Target said, "We're going to train the employees we have and just make sure our service is better." So that's what they're planning to do. People they're planning to evaluate workers on how they greet, help out, engage with shoppers. stepping up efforts to make its service stores more consistent. That's cool. It's always like the funny part when you go to a store when you need someone, there's no one there. But then when you're just like browsing, not really sure what you're looking for, then there's like a person's asking you what you're looking for 50 times, right? It's a hard balance, but I generally like to get help in where the thing is that I'm looking for. I would like to know right away. I don't like to shop around a lot. I just want to know where I'm getting. Get in, get out, get on with life. That's the best way to do it. In our market update, we talked a little bit about everything going on with oil prices. There was a company called Snowflake rose 36% Wednesday in extended trading. They're doing a deal with Amazon. They're going to spend 6 billion on Amazon Web Services over 5 years. Um, and they also have some other. It's a kind of a trade deal with Amazon. It looks like as investors, we're still waiting for the personal consumption expenditure price index reading for April. And we are getting that soon. So we'll see what happens with personal consumption expenditure price reading. Nothing much else really into the markets. Again, we've been treading along, treading higher. The themes still remain geopolitical issues. Now people are talking about the tech bubble, AI bubble. Is that a bubble? Is it just the fact that people are buying on expectations of future growth, or have they overbought for in the short term and need a cooling off period? We'll see. That's still to be seen. Um, that's what we have for current updates. It's a pretty robust version. Let's jump into some of the questions that we had. I think there were a couple good questions that I wanted to see if anyone had the answer to. The first one being, do consumers send money more through Zelle or spend more money on Amazon? So do people send more money through Zelle or spend more money on Amazon? So it's like Zelle is mostly a service, right? If you do a service or something, hey, Zelle me, I guess, is what I use an invoicing platform. But I think it's gonna go. So it says, is it people buy more from Amazon or service? I think people are buying more from Amazon than they are doing Zelle. Let's see. Send more money through Zelle. Okay, answer. Send more money through Zelle. Okay, interesting. I was wrong. 2.3 million sent every minute on Zelle versus 512,000 spent every minute on Amazon direct online sales. Interesting. That's an interesting stat. So people are sending that much money through Zelle? What? How are people doing so many services every minute? Where's the money going? I don't get that. Maybe it's just the amount, right? Like at Amazon, you're only getting like a few $100 worth of stuff or something. I don't know. Versus you might send a lot more, I guess. That's interesting. That is interesting. Funny enough, do people use the Apple Cash? Someone accidentally sent me Apple Cash and I sent it back. I'm like, why did you send me Apple Cash? I don't use that. I've never really used that. It seems really easy to send, I guess, if mistakenly. Um, Next question. How much do you need to invest monthly to have 1 million when you retire? This is a age-old question. The assumptions here for this person is, I think, a 40-year timeline. A 40-year timeline, roughly. So if you're young, 40 years, $322 a month, even if you contribute. So they're using behind the numbers, they're saying 8% compounded year over year average for 40 years, $322 a month to get you 1 million. But what would 1 million be worth in $1 million in 40 years is probably going to be like $50,000 with inflation and different things. We'll see. That's just a really aggressive, kind of sarcastic view of it, but it's going to be a lot, not worth a lot. We'll see. Folks, that's the Your Money Your Life podcast this week. Make sure you like, subscribe, 5-star rate and review. Send this to your friends and family, and we will, of course, talk to you next week.